What is going on, guys? In today's video, I'm going to be explaining some new news that I really don't think a lot of people know about because it is very new. And also, I'm going to be explaining why I think everything that I'm going to be explaining in this video is going to lead me to my final conclusion and to my final thesis as to why I believe AMC will be $70 a share very soon. And then from $70 a share, it will be breaking and reaching $100 a share and possibly go even higher very soon before the end of June. That's my prediction. So make sure you guys do not skip a second of this video. Make sure you guys watch the entire video. Otherwise, you guys can miss out on why I think AMC could easily break $70 a share and then go all the way to $100 a share. Now, the first news that I want to go over is the fact that AMC could be included into the Russell 1000 index, okay? This article states the market capitalization breakpoint, which separates companies in the United States large cap Russell 1000 index and companies in the United States small cap Russell 2000 index increased by 73% from 3 billion in 2020 to 5.2 billion for 2021. And so what is really going on with AMC is right now they are in the Russell 2000 small cap index, okay? And so what could be happening is that on June 25th, that is when they are going to decide whether AMC and possibly even GameStop could be included into the Russell 1000 index, and this is the large cap index. And so basically for you guys that do not know what happened to Tesla, and yes, I know Tesla was added into the S&P 500 index, so it is very different. However, when a stock gets added to a new index, this is regardless of what stock it is. It's just when a stock gets added to any index, usually what ends up happening is that stock ends up getting institutional ownership from many institutions, and then from there the price of a stock ends up increasing because there's just so much institutional investments, okay, because it is added into this specific index. And I'm sure that a lot of you guys know what happened to Tesla when it was added to the S&P 500 index, okay? It went from $400 a share and then it went all the way up to $600 a share. It had a $200 increase just because of the news that they were potentially going to be in the S&P 500 index. And then once the news was confirmed, that is when they started going up $200 a share. And then even after, okay, usually what happens, guys, is when there's news that a stock gets into an index, it is usually a buy the rumor, sell the news event. However, when Tesla was added to the S&P 500 index, it actually stabilized right after it got added to the index. It was completely stable and the price actually did not drop a lot below. I think it was like $535 a share. So there's obviously a lot of resilience when a stock gets added into a new index, okay? And so that is why this is insane news for AMC and even GameStop. I know that this video is not about GameStop. However, I will be making conclusions and basically comparisons as to why AMC is in its final stages before, in my opinion, and remember, I'm not a financial advisor, but in my opinion, before AMC goes into its final stages of going to $100 a share, because what I'm seeing is a lot of similarities between GameStop when it was trading at $400 a share and even before it was trading at $400 a share to AMC right now, which is trading a little bit below all-time highs. Okay guys, so right now I am in IBD, or in other words, Investors Business Daily. If you guys watch CNBC, basically CNBC loves this company, and what I want to talk about is the comparison between GameStop and AMC and why I think AMC is right about to go to $100 a share. And this is because I think it is in its final stages before having that price increase to $100 a share, just like GameStop was right before it ended up reaching to $400 a share. Now, in IBD, basically, they tell you all about the fundamentals of AMC. A lot of other companies will not have an updated short interest or the short percentage, or in other words, like the short percentage float, meaning that how many people are shorting the stock. However, IBD usually does a really good job at that. So basically, the float is 440 million shares roughly. And what I want to talk about is a lot of people are comparing GameStop, saying that GameStop had a short interest of roughly 100%. I know some people are saying it's 180%. To keep it simple, I'm just going to say that the short interest for GameStop was at least 100% because I think it actually was around like 100%. And so for AMC, the short interest was 22%. And recently, what a lot of people are saying is that the short interest has actually decreased to 18%. And so a lot of people are now scared, saying that, okay, well, if more institutions are not trying to short the stock, then where is the potential short squeeze how is that going to happen? How is a short squeeze going to happen? And we know this because a lot of Wall Street firms are actually limiting short selling, right? Because they know what happened in GameStop and they even know what happened to AMC. The price literally went from $5 a share, which was around the time that I was buying it, all the way up to $77 a share. So a lot of Wall Street firms are now limiting the ability to short stocks like AMC and GameStop. So now what a lot of people are fearful about is, where is that short squeeze? How is that going to happen? How is a short squeeze going to happen? And so what you need to understand is that for a stock like Tesla, let's just use Tesla as an example. If someone were to tell you that the short interest was 5%, which for Tesla it is, there is a 5% short interest on Tesla. What a lot of people are going to tell you is that that is too much. That is a lot, okay? And that is insane. That is absurd. However, for AMC, the short interest is roughly 18%. And a lot of people do not think that is a lot. However, when you compare it to Tesla, which has a short interest of 5%, it really is a lot. Of course, when you compare it to GameStop, GameStop has a short interest of 100% at least. And then you compare AMC, which has a short interest of 18%. Of course, it seems much less than GameStop's short interest. However, you have to understand that still a short interest of 18% is a lot, and there's still a lot of potential for a short squeeze, and yes, even a gamma squeeze, because there are a lot of options and there are a lot of option contracts, especially the call options that expire this week, and they have a high amount of volume, and they all think that AMC is going to reach at least $100 per share. I know I talked about this in my previous video, but AMC, you could see the call options versus the put options, and there's much more call options compared to put options. And even if there are put option guys, what I think is happening is, for the people that have put options, some people might actually be selling put options. And for those of you guys that do not know what selling a put option is, it is basically a bullish indication, okay? It is not bearish. It means that you want to be able to buy 100 shares of a stock if it reaches a certain price. That might be why there are so many put options, because a lot of people want to enter AMC. So they're trying to get AMC for the best possible number. Let's say they're trying to get it for $35 a share. That is just an example. So someone might be putting a put option, they might be selling a put option for $35 a share. And then what is going to end up happening is that person, if AMC ends up hitting $35 a share, what is going to happen is they will give that person a cost basis, or in other words, their average will be $35 minus the premium that they get for that put option, and then that is going to be their total cost basis for AMC. So it is a very good strategy if you want to enter a stock, and that is what I think a lot of people are doing. For example, let's say someone wants to sell a put option. Let's say they want to sell the $35 put option for AMC, and let's say the premium that they get for it is a dollar, right? So they're not actually getting AMC for $35. They're actually getting AMC for $35 minus $1, which actually gives them a cost basis of $34 per share, okay? Right now, the price is around $45 a share. And so getting AMC for a cost basis of $34 a share, that seems like the best deal. And so that is why I think the put options for AMC, even if they are high, I think that a lot of people, instead of buying the put options, I think they are actually selling the put options. And so for AMC, the reason why I think that it could be breaking potentially $70 a share this week is because these $70 to $74 call options, there are 226,000 roughly calls that are being purchased this week, and they expire this week. Okay, for the $70 to $74 strike price compared to the 10.4 thousand put options, okay? 10,400 put options compared to the 226 roughly thousand shares for AMC. That is insane, and that is a definite comparison. And obviously, there are more bullish indications compared to the bearish indications. And so the reason why this week is so important is because if you go to the next week, right, so June 25th, the call option that expired June 25th, there is definitely a decrease in volume, right? So there are right now almost 19,000 calls already purchased for next week, which think that the price of AMC is going to hit at least $70 a share compared to 195 put options, right? And so obviously, as the time goes on, these option contracts, they just decrease in volume. However, what some people are doing is they're having their options go all the way out until August. So this is also what I'm saying, guys. AMC, in my opinion, does not just go down. Even if it does go down, it will be temporary. And so the reason why I think AMC's price action, if it does go down, I think it will only be down temporarily, because AMC moves in cycles just like GameStop. And it's very important that a lot of people look at the technical analysis for any stock, but in this case, it is AMC. However, if you do look at GameStop, GameStop had many cycles, okay? And GameStop had the first cycle of going up before it went down and then went back up and then it went back down and then it went back up again. Okay. So those call options that you saw that went all the way back to August of 2021. Okay. There are call options for even next month. Even if AMC does go down temporarily in, let's say, 1 day or 2 days, the AMC run is not over. And in 1 second, if AMC has any news, if AMC has any bullish news, the stock of AMC is probably going to have another insane run up. And that is just because these stocks like AMC and GameStop, they move in cycles. And yes, while the price of AMC went all the way from $77 a share all the way to $45 a share roughly in after hours, I do think that AMC is a very resilient stock because of the fact that it moves in cycles and also because there are so many call options that expire with a lot of volume compared to the put options, okay? So it was the options with high volume and just the fact that it is a very resilient stock, and this stock has not retested the $36 level yet. The lowest it went to was around $38 a share. My personal price targets for this stock, and remember, I'm not a financial advisor, but this is just what I would end up doing because I ended up buying AMC right around here. And again, guys, when I was buying it around here, I was talking about the RSI and the MACD. Obviously, those indicators do not work right now. Those technical indicators will not really identify whether the AMC direction will be moving upwards or downwards. So if you guys use any technical indicators, I don't really think that they will end up working. But again, that's just my opinion. But for AMC, if it ended up going to for the 5 day, 5 minute chart, if it ended up going to $43 a share, that is when I'll be increasing my position. That is a major support. And then if it ended up going to $41.50, that is also when I would be adding more. And then if it went to $37.67 again for the third time, I will be increasing my shares, okay? Because this stock has a lot of momentum and I do not believe that the momentum is over yet. And if it does end up hitting these support levels, I think that will be even better than AMC immediately just going up, because what usually ends up happening, guys, is when a stock ends up going down, that actually just prepares it and that gives the stock more fuel and more room to run if it does end up going up. And if you add volume to that with the call options and even just people buying shares in general, that is what makes the stock go up even more. It's when the stock goes to support levels, and if it does reach support levels, that is when, as soon as the stock starts going up, that is when the stock goes up even higher and even higher and even higher. And then that also creates a short squeeze because a lot of people will add volume to that by buying call options compared to if the stock just went up immediately, right? Because when the stock just goes up, people will think that they missed out because they thought the stock was going to go at a support level, but instead of going to support, it immediately ran up, okay? So I think that if it does end up going to a support level or if it goes down, which I really don't think that it'll go that much lower anymore because the stock has a lot of momentum. But if it does, just know that in my opinion, I don't think that that is negative at all. I think that that would just give AMC more room to run. I think that that would just make the AMC run to $70 a share and $100 a share even more possible. Okay guys, so with that being said, I'm going to end the video here. Thanks again for watching and I'll see you guys in the next video.
Got me singing like James.